Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures, downtown Chicago. It's Friday, December 7th. We're here to talk to you about the grain markets today. Okay, I'm going to start export sales this morning, solid across the board. So we're going to talk about exports every week, and we got real good numbers here today, and let's just keep talking that this is going to continue. Okay, the corn market, our first chart of corn, you can see off Sunday night's China-USA Summit, we've gapped higher in the corn market. I like this chart. Now, corn went back down and filled that gap. That's what markets do, and corn's really, really good at filling gaps. I've learned that in all my life doing these markets here. So I kind of think there's 10, 15 cents on the upside for corn here going into the end of the year. Markets like even numbers, I think March corn could trade to $4. That'd be a positive for U.S. farmers. We've got a lot of corn to sell to the world. So I do like this chart on corn. And let's see this export demand continue here. Okay, next up is the soybean market. And certainly our next chart of soybeans, you can see we gapped higher off Sunday night summit. And when I saw my newspaper Sunday morning and saw the truce announced between China and U.S. leader, that's a very good headline. And now you can see the volatility here, and that's not going to go away. The next 90 days, we're going to have a lot of volatility in these grain markets. But it is December now, and our harvest is over, and it's the time of year for grain markets to try to trade higher. We're demand-driven markets now, so we got to have the demand continue, and demand-driven markets are more technically oriented. So here we go. We're above 906.5 on January soybeans. That was the high on the way up, and now we're above there. So look for these January soybeans to trade at 930, 940, 950, something like that. You're going to see a lot of farmers selling when we rally, so it'll be a good kind of a slugfest here. A good higher prices for the U.S. farmer, but there'll be sellers on any rally here. I do like this chart pattern in soybeans too, this gap. Sometimes genius is simple, and natural gas gapped higher and then had the big rally that we saw in November. So, and by the way, the Chinese from the summit, they say they're going to buy soybeans and LNG, liquefied natural gas. So we'll look for that to happen. I have seen some announcements of USA soybeans to unknown destinations this week. Many times that's China. So we'll continue in here. It's hard to trade typical fundamentals with these tariffs going on between China and USA. And by typical fundamentals, I mean weather and supply and demand and South America situation, things like that. So mentioning Brazil and South America, Brazil soybeans are $25 a ton more expensive than USA soybeans. So I find this interesting. You know, we're all consumers of the world. We want quality at the best price. And if these two leaders can put the politics aside, it seems like there'd be an avenue here for exports of U.S. soybeans to the rest of the world. So we'll keep talking about that. One caveat too now, Brazil's soybeans to China in the month of November up 170%. So you can see Brazil really selling a lot of soybeans to China here. And then lastly, our chart of wheat. No gaps on the wheat chart, more of a follower here. It seems to be in good resistance. Wheat's up 10 cents this morning, so I think it's more of a follower here going forward. So wrapping it up, everybody have an excellent weekend.